I think looking at both markets in turn, I think looking at the sales market first, I think if we're not at the bottom, we're probably quite close to it. So that often influences people in terms of their timing. Over the last few weeks, we've seen inflation calm down, come under 5%. We've seen mortgage rates or a 5-year fixed rate come under 4.5%. And I think speculation is now turning to when the first rate cut will come rather than the size of the next rate hike. And so I think sentiment has notably improved over the last few weeks. So I would say if you're trying to time your purchase, and often people try and get their timing correct, it feels like the next 6 months are going to be better than the last 6 months for the UK property market. If we're looking at the lettings market, I think it's normalising, but it hasn't fully normalised yet, is what I would say. I think supply is starting to pick up a little bit in certain areas, but not to a great extent. Tenant demand is still very strong, and so rents are still rising quite fast. So I think it really comes down to, as ever, your personal situation, what you want to do, what your long-term outlook is, and you'd have to weigh up a sales market on the one hand that looks like it's kind of getting to the bottom, and a lettings market that's probably not quite fully where it's going to go to in terms of those rental value decline, the rental value growth that we've seen. I think it still has some way to go before it calms down fully.
Okay, let's forget the lettings market for a moment. Assuming that we see the Bank of England actually cutting rates around the second quarter of next year, is perhaps the best time to think about buying property in the latter part of 2024 and just hold it for now?
I think if you're looking at what the Bank of England does, the best time arguably is now, because the Bank of England has already calmed down its recent cycle of rate hikes. Speculation is turning to when it next cuts. That could happen at the beginning of early next year, depending on how the UK economy is doing. But it'll certainly begin to happen next year. But mortgage lenders are also keen to lend, which is putting downwards pressure on mortgage rates because the market has been so thin this year that lenders are looking for market share. And so there is strong downwards pressure on mortgage rates. They're not going to come down by huge amounts. So in that case, you would kind of try and time that. But we're talking about small movements downwards, and so arguably it'll be probably towards the back end of next year, arguably too late, because you'll also have a general election in the mix. So I'd say the first half of next year, actually, unless a general election is called for the first half of next year, I think you're probably going to have a relatively healthy market, and that includes that seasonal spring bounce in a way that we didn't see the market bounce this autumn as we normally do.
And how come the general election could have such an impact?
Markets don't like uncertainty, obviously, and the property market, it's sometimes overstated, but I think the property market tends just to slow down in the run-up to a general election, particularly one that looks like we could see a change in the government. And so people just start to put plans on hold, and there's a natural kind of pause, I suppose, in their life. Most people actually, and this is often overlooked as well, most people move buy a house because they need to, not because they want to, because they are moving for jobs or for schooling. But people do tend to put things on hold a little bit before elections, so we could expect a slowdown if depending on when the election is called next year.